Welcome to the next session of private equity. Today we'll discuss on the purchase price allocation (PPA). So how PPA firm allocate cost of a acquired company. For example, a PE firm want to buy a new company or target company. So how we estimate the cost of a acquired company. So there the PPA will come into the picture. Purchase price allocation. When a company is acquired, where does the money actually goes? And that's where the purchase price allocation came in. Think of it like buying a business. What part of a price is for the asset, what for the goodwill, and what for the asset liabilities and all, and expenses and creditors. So all the allocation will be designed into the purchase price allocation part. So PPA assign the purchase price of a asset liability after the acquisition. Why it's matter? Affect the tax and financial reporting and many more at a part of a audit. For example, a PE firm buy 1 billion company allocating 700 millions to asset, 300 millions to goodwill. Accounting behind plays a big role in the part of a taxation and running the business in the profit and loss. What you want to understand more thing about this or how the money moves in the private equity, hit the follow and stay tuned. If you have any question, you can comment on our comment box. Thank you so much for watching. We'll meet you on the next part.